final discussion. For this discussion, I have my friend Leonardo Beltrán. Leonardo was the former undersecretary in the Secretary of Energy in Mexico in previous governments. And it's a real pleasure to have you here, and it's a real pleasure to have all the panel for this discussion. In the panel we have different point of view about this specific topic. Go ahead, Leonardo. Thank you very much.
Thanks very much, Alfonso. It's a real pleasure for me to be here. I really want to thank the dialogue, Rebecca and Alfonso, for inviting me to be part of the dialogue. I'm now a senior non-resident fellow of the Inter-American Dialogue. So thank you very much for this opportunity. It's an honor and a privilege to try to contribute a little bit of my experience and provide my couple of cents to the conversation. And certainly, I would like also to thank Michael Kearns. The organization has been impeccable, and also the team at the dialogue. And my fellow panelists, it's a luxury to be here with you. We have a combined 100-year experience here in this panel, so it's amazing. I would like you to say a couple of phrases about yourselves. I mean, I would try to make justice of who you are, but I rather into you of who you are, and then what I would like to do is to have an open, frank conversation about these challenges of what is happening today in many places. Certainly, the rule of law is something important. That's a point that we have been discussing across all the different panels today. Certainly, there are different changes in the region. Regulatory frameworks, are a basic component of the institutional infrastructure across the Americas, and in some places change, in some other places they do not change. But in the end, what we would like to have is enabling policies to attract and provoke private sector participants, and certainly not to crowd out these investments. So please, Jessica, would you introduce yourself?
Of course. Thank you so much, and thank you to the dialogue for the invitation to participate today. My name is Jessica Bedoya. I'm the founding managing partner of the LARA Fund. It's a private equity fund focused on energy and infrastructure, strategic assets across Latin America and the Caribbean, mostly in the middle markets. But I speak to you with over 25 years of experience covering Latin America in various iterations of my career as an intelligence analyst, as a diplomat. I worked at the White House National Security Council as the Deputy Senior Director for Western Hemisphere. I then moved on to the Development Finance Corporation. I was Managing Director for the Western Hemisphere there, and then I was in the Inter-American Development Bank. And just very briefly, my transition from a long tenure in government service and development finance combined has led me to want to launch a private equity fund, because I am a big believer in the region in Latin America, the Caribbean. A lot of headlines focus on what's going wrong in the region. I, through my fund, like to focus on what's going right. I'm not here to oversell the region. I tell my investors, I'm not here to convince you that there aren't challenges, that there aren't issues. There's issues everywhere in every emerging market, even in our own country. But if you are diligent, if you are able to roll up your sleeves and do the work of finding the right partners, the right sponsors across Latin America, you can find really, really great investment opportunities. So I hope to share a little bit of our views on that today and talk about the rule of law and other barriers to entry.
Fantastic, Jessica. Thanks so much for that, and we look forward to having your point of view. Martin?
Thank you. Hi everyone, I'm Martin Menski. I'm a partner at White Case, which is an international law firm. I'm based here in Washington, DC. I'm a Catholic project finance, project development lawyer, so I basically advise companies and banks, and in some cases the multilaterals and DFIs that finance energy and infrastructure investments in LATAM. So power stations, SAF projects, oil and gas, LNG power, etc. I've been working in LATAM for just over 18 years now, I think, 15 years of which have been based here in Washington, DC. So don't be fooled by the accent, but I'm thoroughly based here.
Great, Martin. Thank you very much. And Andrew.
Andy Derman, partner with Holland and Knight. I've been working in the energy area, for me primarily oil and gas since '78. So I've seen, and my practice is global, but it definitely includes Latin America. But I've seen the increase in lifestyles and production and good times in many countries, especially in Latin America. And I've seen countries just fall off the cliff. So there's success stories and there's total failures. It's not rocket science, to look at why things happened and it worked. And it's not rocket science to see why you fell off the cliff. So maybe as we go forward, we can share some ideas how people exploited the opportunity, exploited it in a positive way, took advantage of the opportunities, and where people lost their way and are suffering since.
Thanks very much, Andy. It's amazing the level of professionalism that we have here in this panel. So I appreciate once again to the dialogue for this opportunity. And let me perhaps just stress a point about Latin America and the Caribbean. It has the most amazing natural endowments worldwide. So if you are to take advantage or seize or exploit natural resources in a sustainable fashion, Latin America is the place to. For example, and let me give you this statistic. Brazil only has a potential of offshore wind in the order of 700 gigawatts of our capacity that could be exploited. So only one country in the hemisphere will be, if things align and we would invest in this place, we would be looking into 700 billion only for wind. Now, if you go into solar, Chile has the most amazing resources that there are worldwide. If you go to the Gulf Coast of Mexico, you have plenty of resources in geothermal, in practically wherever you go, you would have this amazing wealth. So that's one of the key reasons why Latin America is one of the key priorities if we are to see a sustainable future worldwide. Now, certainly, legal and regulatory challenges are present. And for example, in my country, Mexico, we do have political swing, and this has created an impact into the judiciary. We are a couple of months away from electing all the judges at the federal level. And this is unprecedented, and this is going to happen in June. The only other example is Bolivia, which probably Martin or Andy can say a little bit about these places, and most certainly Jessica can touch upon that. But this is only to say that there are different changes in the democracies in the political environment and in the institutional framework that have an effect into the way we do business and the way we forecast or frame the future of our job market. Another key point that I wanted to mention prior to start with the conversation is across the hemisphere, we are a little over 1 billion people. We live in the most organized area worldwide. So that creates another big area of opportunity in terms of consumption. We really need to supply the needs of conditioning spaces, of moving from one place to the other, of telephones, of petrochemicals, of all of these different items that make our existing livelihoods as it is. So Latin America, it's a place where you do not only have a natural environment, which is amazing, you also have the most organized area worldwide. And the other part is that it's already connected. So in terms of logistics, it's super cheap to move from one place to the other any of the products that you have. So no wonder why it's a huge destination for private sector investment. And for that purpose, we will start discussing about what's happening today on the rule of law and regulatory frameworks, and what are those different enabling policies that will promote energy business development. But let me also say a couple of other words. Certainly, we have challenges in terms of this political or infrastructure zones. But for instance, the World Justice Project has ranked different countries worldwide in terms of the rule of law of all the jurisdictions. And 3 countries in the region rank in the top 32: Uruguay, Chile, and Costa Rica. So, we do have places where, we know how to do business, how to set up infrastructure, and how to create enabling policies. But let me ask Jessica, how do you see risk having an effect into the cost of capital of doing things in Latin America?
The first question my investors ask. And I would say that, obviously investors are generally tepid moving into Latin America in part because of, the regulatory concerns. There's a lot of very high barriers to entry to begin with. As an outsider coming into some local markets, when there's enough local capital, I was just in the Dominican Republic, they have more than enough $4 billion of local capital that circulates throughout the island, and they don't, they have interested investors, but they have their own capital they can rely on. But to your point, I think as I've designed our investment thesis and looked at Latin America through the prism of private capital investor, there's 3 things that come to mind in terms of how risk affects the cost of capital. One is obviously what we're talking about today, which is the regulatory environment. I think by and large, we weigh a lot of the deals that we see through what are those political will and very dynamic legal forces at play in terms of jurisdiction, in terms of conflict resolution, in terms of the ability as a foreign investor to get our money out at the end of the day. That's really ultimately what matters. We have found that despite what you just said, there's 3 countries that have pretty formidable environments for investors, that even the countries that aren't on the list of top 30, of Paraguay and Ecuador, Dominican Republic, there's still ample room to grow and to partner with the right local partners, operating partners, or other funds who know how to navigate those regulatory complexities. So that's 1. 2, obviously political risk. I think by and large, that's why political risk insurance is really important. That's why you have MIGA. That's why everyone asks, what's the scope of PRI that's going to be required for the duration of your investment period in the country and whatever asset you're investing in. I think for our fund, that's a bit of our differentiator because I come from a long trajectory of doing political risk analysis, frankly. And I think a lot of jittery investors who aren't familiar with the market, who don't know who they're working with, tend to be a lot more timid and tepid and tend to frame the conversation about not wanting to invest in the country because of the headline, because of governance issues, changes in government, uncertainty, electoral uncertainty, you name it, corruption. I tell a lot of those investors that that's almost the lazy way of thinking of the region. So for us, political risk is something we weigh. But I think if you're a serious investor, you're willing to look at these markets and understand that across Latin America, it ebbs and flows in terms of the dynamism of the politics of the day and the transitions of governments and violence and security situations, et cetera. So that would be the second factor where I think we tend to be our aperture and our appetite is a little higher. And then obviously, ultimately, it's knowing who you're working with. Being able to do proper, adequate, and very in-depth due diligence and ensuring that as an investor, you tend to mitigate risk by ensuring that you're employing the strictest and the stringent ability to filter your partners. I've gone through many deals already in a pipeline in the last 18 months since we launched the fund, where frankly, sometimes it's just the other people on the other side of the table that, just don't meet the mark. And I think that investors welcome the realism with which we're funneling pipeline and being able to honestly say, look, great deal, not great partners. And the reputational risk that brings, and that's I guess the fourth item is reputational risk is obviously another factor that investors look at writ large. So I think cost of capital increase depending on the market that you're operating in. But as you know, there's a lot of money going into Mexico, there's a lot of money going into Brazil, environments that have their own stories of bad deals, corruption. But again, to us, it's not scary. We want to go into these markets. And if you decide that risk is ultimately the cost of capital is too high, you're never going to get private capital flowing in the region. So at some point, something's got to give.
Well, certainly, Jessica, perhaps this is, or let me ask if this is more a perception rather than a fact market. We discussed about what's the institutional structure in place, local and international, and what are the different opportunities and the different mechanisms and tools to actually get your money back. But if actually this is more a perception than a reality, then what should we do?
Yeah, I think the typical lawyer answer is it depends. So yes, there's definitely a lot of risk, counterparty risk, country risk, political risk. But I think there are some fundamentals in Latin America that make it attractive for energy investments. So, and it depends country by country, of course. Chile has always been very stable until recently. Of course, we've seen quite a few changes in the tariff regime for PNGs, small scale renewables, which has created some uncertainty in the market. There have been changes in the regulatory regime in Brazil as well, thankfully not as drastic as we were fearing with the coming of Lula. So, but fundamentally, in terms of the sort of institutional frameworks, the norms that have developed over time, right, as investors have become comfortable with investments, we're seeing them continue to plow in and find solutions. So Chile, despite the tariff changes, we're seeing novel solutions coming to the market with banks and insurers and all kinds of other players that are willing to take risk. In the battery sector in Chile, for example, that's really been quite exciting. We've seen a multitude of projects being announced, and with with investment decisions being taken earlier this year. In Brazil, despite the dollar-linked PPAs taking off, we did the first commercial bank financing of a Macquarie-led deal last year, 2 years ago now, which has actually been completed. It's actually built and operational. We haven't seen a huge number of projects come in, and I think that was partly because of the change in administration. People were a little worried that some of these, frameworks have disappeared, but they haven't, and they're still there. And we're seeing renewed interest now, from investors. But of course, doing a dollar-linked financing, foreign currency financing, is in itself risky in a market where your revenue stream may not necessarily be in dollars. So, I think it's very much fact dependent, but I think fundamentally the institutional frameworks, the public law frameworks that we've seen, the role of the multilaterals, IDB Invest has been a key player here in changing perceptions, as you say, and making it more acceptable for different kinds of investors to come into the market. Now, there are obviously countries like Mexico, where we know it's been difficult. At the same time, there are new opportunities. I think chaos brings opportunity as well. So we are seeing investors piling back into Mexico, in fact, to find assets that are undervalued, where they see scope for growth.
Thank you very much, Martin, for this view. Certainly, it depends on facts, on location, and certainly some other things. People matter, as Jessica was pointing out. But Andy, so what do you think? Do you see is that the outlook in this environment where the rule of law is changing not only in the region but elsewhere, even here? The institutional framework is also moving, shifting. So we heard that in some cases are facts, like security issues, safety issues. But in other places, it's more a perception that it's riskier than it is. So what's your outlook? And if you have an example that you can share where it's much more than a perception, but a combo of different opportunities that you can take advantage, seize, or exploit in the region.
Right. I was thinking while we were talking, if you looked at my passport, you would see what countries provided good places, safe places to invest, and what countries I never go to. So early on, I was going to Venezuela, I was going to Ecuador. Those places I had been to in ages. Where do you go now? You go to Guyana, Suriname. Good examples of places, Guyana in particular, respecting contracts, even though the discovery today is so large that had they had the next tender will look much better for the government than the original contracts that they have, but they're respecting the contracts. Trinidad and Tobago have basically respected contracts and they maintain the business model. Colombia was the example, the place that you could go, and I'm thinking energy, where your contracts were protected. Query, is that still true? There's a lot of opportunity in Colombia, especially in the oil and gas sector that they're passing on at the moment. As you and I discussed in preparation for this program, Mexico, we salivated for years to go into Mexico. Then 2013 happens, 2014 it opens, 2015, 16, 17 it's real. People are making investments. So, there's giant discoveries like Zama, which is still not developed. You question why, but they're still not developed. And then, there's an example. I draw your attention to the Finley energy case, which is a USMCA NAFTA case, which Finley Energy brought against Mexico for violating the treaty. And all of this, in this particular instance, it's all public. So the USMCA arbitrations are public. You could have come to our hearing. If you want to see the hearing, you can go onto YouTube or you can go onto the World Bank webpage and you can see, I'm not saying you want to watch it, but you can see 5 fascinating days of the hearing and you can learn all about it. And the only thing that has been redacted are the phone numbers of certain Pemex employees. Everything is there, right? The entire story is there. And if you care to, you could read what happened to Finley Energy and what the tribunal, because the tribunal issued an award on jurisdiction and the merits, and found in favor of Finley Energy and the corollary against Mexico. Anyway, it's actually a very interesting story. Maybe not 5 days of listening to 8 hours a day of YouTube video, but it's an interesting story, and it is a tale that may cause some investors to say, no, not Mexico, not yet. Maybe the Mexican system in the traditional form is going to improve things, but we'll see. We'll see. So there are examples of positive movement. Argentina, 2024, put in place a law to promote investment. And I don't think most of us could write a better law. See what happens with the next administration if they try to undermine what they've written. But they've attempted to give you a certainty and stability, which is the key to our contracts. Most of the energy contracts I work with, you can't get insurance for. They're too big. They're beyond the limitations. You're talking billions of dollars, and you're not going to get insurance for that. Maybe for a piece of the initial project, but so you're making these really long-term bets, and you need and in your case, you just have to get the payout of the financing, right? In my case, I have to get to the end of the project, right? Which is 30 years. I have to protect something. The goal is to protect it for 30 years. And the goal today is to extricate yourself in a reasonable fashion at the end of the project. Not so easy. I was here 2 weeks ago for another arbitration dealing with a Latin American country on the exit of a project. Those are not easy. So designing that so that you have, this was at the breakfast this morning, right? The key word was trust. It was trust between governments this morning at breakfast. But it's trust between the investor and the state that you're not going to change the rules in a radical way to deny me my reasonable expectations.
Well, that's super helpful, and perhaps let me now ask you a question about trying to navigate shifting currents, and this is about trade. What about trade? And let me start with Andy. Just a quick reaction, and I will add a couple of other words, but just a quick reaction about trade and Latin America.
Maybe this is the opportunity for Latin America, because if you're in a project in the US, specifically focused on oil and gas projects, and you have I know we closed that today, $64 oil, it's not good enough. And tariffs into your price of your steel and the valves that you have and all of the high-tech equipment that's not manufactured here, that is a cost that's significant. So if you're in an LNG project, or you're trying to do a big upstream development project, and you've now burden the project with significant tariffs, that's going to have really significant impact on the project. Couple that with really low oil and gas prices, in this case, oil prices, and those projects may not look so great. But you have an engine to make investments. You have people, you have resources, and the projects in, the projects in Argentina have really good rocks. Right, the back and Norte play, that's a replica of an unconventional play. We have the expertise, we have the capital. Perhaps this moment is the opportunity for some companies to say, I'm going to give Argentina a better look because other places are more uncertain.
Do you agree, Martin?
Yeah, I think that's right. I think what we're seeing.
Remember that the framework is trade.
Right, yeah. So I think what we're seeing is a shifting of investments as a result of the current trade dynamics. So we've seen a big push, for example, from the Europeans investing in LATAM. So we've seen multilateral agencies and banks and private equity investors from Europe coming in, not just the usual Spanish contractors and Italian suppliers, but the sort of more real hardcore investors coming in from Europe with European government backing into LATAM. That's a relatively, they've always been there in a way, but not in this sort of large scale sense. So the sense I get is that the trade politics that we're seeing now has shifted priorities for some countries, and some kinds of investors are now coming into LATAM, which previously maybe they wouldn't have done. They would have gone to Asia or Africa or somewhere else.
Jessica?
So I'm traveling a lot to the region recently, and a lot of the questions are around the tariffs. And my only response is this is it for Latin America. This is it, because Latin America has struggled for the last 20 to 30 years to be on the radar as a real destination for private capital and foreign direct investment. It's achieved some success, but for it to take off, let's look at the region. It's conflict free. It's proximity. It's abundant. There's no reason why it shouldn't receive a boon in private capital, especially now as people are hesitating coming into the United States. So I tell everyone I speak to in the region, the private sector, it doesn't matter the market or country or the sector, this is it. And if you are smart and savvy about it, you are quickly trying to identify either how you can build a bucket for what will be a big vacuum in the United States for products in certain markets because of the China-US trade spat. And or snapping back of the supply chain issue, especially with critical minerals, especially on the energy side, it's going to be a big boom, and it should be. So the country should be responsive and should be proactive about charting a course to address the continued regulatory barriers and barrier to entry, to try to really curry favor with investors who are interested.
So let me now ask you, given that you bring that up, China, what brings you to mind when we say China?
I think that the region has woken up to the reality that, here's the reality. China filled a vacuum in Latin America for the last 25 years. For reasons that everyone I'm sure understands, which is a lack of interest, what we're talking about here, rule of law issues, governability concerns, uncertainty, and they filled a vacuum with, as I had seen it early on, very base level corruption, cash in hand, and has since evolved in 25 years to a more sophisticated investment strategy targeting commodities that they need, correct? In my view, China has suppressed the industrialization of Latin America significantly. Chinese investment was not done for the purpose of growth and scale in the region. And I think the United States has to catch up along with its European friends and partners. And I think that now is the time for the region to continue waking up to the reality that it needs best practices and transparency, it needs adequate due diligence, it needs the expertise of European and US investors and Asian investors doing it the right way, so that they can come out from under the fog of what has been suppressed industrialization.
Thank you, Jessica. Martin, fine.
Well, China's here to stay, and I don't think they're disappearing anytime soon. And I think Latin American countries, certainly when we go to speak to governments about how to structure PPPs or to look at sectors that they want to open up to private sector involvement, they're not going to make a choice between China or the US. They're going to want both, right? They're going to try and hedge themselves. We're seeing that in other parts of the world, Africa as well. You know, you can't ask countries to make a choice like that, and they won't. They will hedge themselves in their national interests. So what we're seeing is, I would say, a greater diversity of the kinds of investors coming in. Some that are maybe sourcing partly from Chinese suppliers, but know that there's a limit to what the extent to which they can do that before they start attracting the ire of other investors or other agencies that may be backing their projects. In some cases, we're seeing different sectors opening up that the Chinese maybe didn't focus on, right? So I think it's going to be a much more complicated field. I don't see it moving one way or the other. I don't think that current trade dynamics are going to change that per se. It's just going to make it more complicated.
China is a formidable competitor in the energy space, obviously, in the fossil fuel area and in the non-fossil new energies. This is maybe an opportunity for them to expand their markets, while others are worried about tariffs in the US. There'll be special arrangements that will be signed by China and other places to encourage a stable source of supply both ways. But I don't know that anything is dramatically going to change. They're here to stay, and they compete in a real way. They have lots of talent, and they have the financial wherewithal to hold big projects.
Thanks very much, Andy. And now let me perhaps finish with, I'm going to say a word, and you're going to react to that word with one word and one word only. Not phrases, not just one word.
We did not rehearse this.
Stability. Yes.
Smart investment. It's two words, but it's one concept.
Yes.
Sorry, do we have to say the opposite? You say whatever just comes to our head.
First thing that comes to mind.
Chaos.
Essential.
Arbitration.
Last hope.
More of it, more.
Evil.
Corruption.
Reality.
Martin Sandbox. Sandbox. Regulatory sandbox.
Future.
Low carbon.
Here it is.
Media. Multilateral investment guarantees.
Multilateral or
Trust.
The new norm.
Risk.
Inherent in everything.
Great. Last one. Inter-American dialogue.
Welcoming.
Essential.
Thank you.
Thanks very much.
Hyphenated.
On longer. Yeah, so you were at BFC.
I was under Adam.
Ah, okay. Take.
Yeah.
Thank you.
Well, thank you very much, Leonardo, and all the panelists for seeing this incredible panel. And we are here in the final of this day, this day, and I am very happy with the results. And we have reached the end of our energy conference. I extend my thanks to all our wonderful speakers and moderators. I want to extend a special thanks to our keynote speakers, Leonardo Galvez of Quebec, Canada, Jorge Rivera Staff, and Patricia Tato. A further thank you to the World Bank and Chevron as supporting this activity. A huge thank to all my colleagues, Michael, and the rest of all the team of the American Dialogue for the support, the coordination, and the incredible work performed today. Finally, many thanks to the audience. The purpose of this conference that we need this space feeling more knowledgeable, empowered, and with a shared commitment to shaping a sustainable, resilient, and prosperous energy future for the Latin American community. But I want to have key takeaways from the panels, and what are my the main concepts that we hear today in the panels. Green energy and renewables energies in the region. We are in the region with wonderful resources, and the opportunities for renewable energies are cost effective, and that is a reality for the development of the energy sector. That doesn't mean that we don't need fossil fuels. Fossil fuels will be part of the development of the energy sector in the future, but we are in the way of the sustainability and in a more and more renewability of our energy systems. And that is why, because now the renewables are cost effective for most of our systems. The other takeaway is the role of integration. We have to develop more integrated energy sector, and that is a challenge for our region. We have great experiences in some bilateral integration. We have great experiences in some multilateral integration processes, but we have to move forward in that sense, because integration is part of the energy security, and it's a cost-effective measure for the Latin American and the Caribbean region. The other aspect is the impact on of trade, the impact of tariffs for the region, and most of you were talking about the opportunities about that situation for a region that has renewable energy systems and lower costs in the energy systems. And we have to see not only the difficulties, we have to see the opportunities about this new scenario for the region, and most of you were talking about that. And the other is the role of the new technologies in this process. How we can advance incorporating new technologies, and what will be the role of the new technologies in the region, that in the region can lead a sustainable development process in the near future, and that is reality. The other aspect is that the markets were designed in the past considering a different reality, and we have to adapt our regulations, we have to adapt our markets for the new reality, and that's will include the role of the intermittent energy in the electricity sector. That will include how to manage new technology to provide reliable energy system, and that is a great challenge for the region. What about climate change? Climate change and the discussion about climate change will be part of the next COP, leading by Brazil. And that will be an interesting opportunity to establish a new discussion, diplomatic discussion about climate change, with a completely different scenario for the diplomatic discussion. And probably we have to be more pragmatic in the actions about the discussion about climate change, and that will be an important challenge for the near future, and probably different blocks will be aligned with more radical positions about climate change, and that will be part of the new scenario for the near future. But renewables doesn't continue the development, and that is not part of the trade war between China and United States. That is part of of a cost-effective energy to be included in the energy systems in the region, and that will have a direct impact in the climate actions and the role of Latin America in that sense. And we were discussing what will be the position and the negotiation as a region in that kind of international and diplomatic discussion. And that is an important issue. About gender, we were talking a lot about gender and the role of the women in the development of the energy sector. I really liked the panel, because the panel had a lot of insights from people that are doing, from people that have experience in doing. And we obtained a lot of terms in that panel. I am really very happy about the level of the discussion, and what was the approach of the discussion that is in the middle of a polarized discussion, and we have to move from that position, and we have to tackle the gender issues with a pragmatic action. And I believe that we obtained a lot of insights in that sense. And Well, we were discussing about the rule of law and the role of the regulation, and we were discussing the business environment in the region. Most of the comments were aligned with the importance of a clear business environment, a clear ecosystems to create value in the region, and that is a great an important challenge for most of our countries in the Latin American region. And that is an important challenge in how we can support the creation and we can support the institutional arrangement in our countries to create good conditions for business development. Of course, as Martin said, chaos has a lot of opportunities in business creation, but well, that external chaos situation could be beneficial for Latin American countries to move forward in a better business condition when the rest of the world has a lot of uncertainty in the near future, and that is an important challenge for the for our region. Well, thank you very much. I am really happy for the final results, and I am inviting you for the next activities of the Inter-American Dialogue that we are planning to have. We were talking with Irene that we will work in a general document with the support of the World Bank to have most of these experiences in the region about the women's and labor conditions. We will have these new activities more focused in different aspects. We have in mind to discuss the situation of specific markets like Mexico, like Brazil, like Argentina. Well, and in addition, next year we will have the ninth annual energy conference, and all of you are invited for the next year during spring meetings. That will be a tradition to have the energy conference during spring meetings, because we have a lot of officials and multilaterals from a lot of external partners that are moving to receive during this. And thank you very much.